All right, look at that. Just a couple of words. Just a couple of words before I unmuted myself. That was gonna be some type of record. Only took me, going into the third day of the technical trading workshop to actually remember to unmute myself. Welcome everyone. Welcome. So let's do a recap of the week. Well, first of all, how you guys doing? Stuart, what's up? Welcome. Hit that like or not. It does matter. It does matter. Please do. Okay, quick recap. What have we talked about during this week? So Monday, talked about the fundamentals of technical analysis. I showed you what tools and techniques that I use in technical analysis, what patterns and all of that I use in my trading. Then yesterday we talked about the RLZ method, the trading system that is a trend following trading system. And then today we're going to talk about the RLZ reversal, which is a more simplistic approach to trading with these methods. Let me just open up my little notebook so I can get some notes in. So today is going to be I'm going to see if I can, do more of a mix of education and, look at the RLZ reversal system, but also show you how it's done live. I want to tell you guys that it's important to understand that this week, the technical trading workshop, basically what I've done is it's very condensed, right? It's a 1 day on the fundamentals, 1 day on the RLZ method, 1 day on the reversal, and then tomorrow we're going to talk about combining it and talk about trading psychology. You have to understand that it's very difficult to take all of these concepts and all of the experience that I've learned over the years. I've been doing this for 8 years and I've been really obsessed with technical analysis. I've spent countless hours understanding how the markets work from a technical perspective, and it's very difficult to put all of that into 1 hour segments, right? So for those of you who like the content that I'm sharing, and especially if you like my style of trading and my style of looking at the markets, then we do have the community. And I want to make sure that you understand that the things that I've showed you here today, it does of course perhaps require deeper understanding of some of these concepts if you're really gonna apply it long term to your trading. So make sure that if you want to follow up on these concepts, you have questions on anything that I covered here, go into the Discord. We do have a completely free community. Now, of course, if you want more personalized guidance, more private mentoring, and you want access to all the courses, all the educational material, and you want access to the indicator, then you have to join RLZ Exclusive, which is currently on a very affordable deal. You can check all the information in the description of this live stream. You can use the code BF to get a 50% discount on all these subscription tiers, which means you get up to a 75% discount on the yearly deal if you use that code up on the already available deal. But you have to remember, use the code BF when you check out. On checkout. Okay, that's it. Now, let's cover the basics of this system. Yesterday, we talked about the RLZ method as a trend following system. Okay. And we talked about how we basically looking at an uptrend. This is the picture perfect uptrend, right? Where you have horizontal levels and prices respecting these horizontal levels by moving level to level and breaking a level here, retesting the level here. This is the break and the retest concept. Of course, we talked about that yesterday. We're not going to go into detail of that today. But the RLZ method, or like maybe I don't even have to call it the RLZ method. Let's just call it trend trading. When you're trend trading, you want to get in on either the breakout or the break and retest. The RLZ method is based on the break and retest. And I'm applying different indicators like the 20 EMA, the 50 EMA, the Fib, and the stochastics RSI. And also we had the weekly and monthly open. And then we had the daily moving average as well. But basically what all of this is doing is it's showing us which of the retests, like if there's confluence between everything here and not confluence here, but there's confluence here, obviously these two are the retests that you want to be taking. Those are the ones you want to be trading. So the overall, the foundational principles is the break and retest in a trending market. And when you have the retest, you're looking for candlestick patterns like the pin bar, the engulfing, or a reversal pattern like a low time frame inverse head and shoulders, or a double bottom pattern, right? So if this is on the weekly or the daily, then you zoom in on the 4 hour, your entry time frame, and you look for that reversal, the confirmation where everything aligns. That's the trend following approach. Now, what if you want to be trading? What if you're not looking to join a current trend? Or let me put it this, you're not looking for anything. You're scanning markets and you see that there is a very clear trend, but it's now hitting a high time frame level. And this is where the reversal strategy comes in play. And basically you're applying the same foundational principles in technical analysis when you're trading this reversal system as if you would be trading a trend following system with just slight variations. This way of trading works really well if you have, well, actually, it doesn't matter if you're in a high time frame trend or a ranging market, but it works quite well if you find a high time frame range. Imagine that you have a high time frame range that looks like this, where price is basically just going from one extreme end of the range to the next, and it's moving like this, you know. And I don't want this to be a W, to not to confuse anyone with specific patterns here. That's not what I'm trying to do. I'm not trying to show you any specific patterns here. I just want to paint out a range. Okay, so let's assume that this is a weekly range. You've identified high time frame resistance. You've identified high time frame support. And you've identified an area that is being used as resistance and support, which is the middle of the range EQ. As you know, the middle of the range EQ, or the range equilibrium, is an area where price likes to react to as well. And it's usually an area that is going to be used as support and or resistance, and vice versa. So this is, let's say this is on the weekly. And then you see that this weekly chart, you are seeing a daily downtrend. Kind of looks like this. That is one of the most ugliest trends I have ever seen in my whole life, but maybe it looks something like this. So we got the weekly moves, and within these weekly moves we have daily trends. Okay, now at the low and at the top, you will have specific reversal patterns that if they print, you're going to have entry triggers on the reversal system. So the way I'm treating this is between resistance and support, I will be utilizing the method taught in the RLZ method as the trend following system. At these levels, I will be applying what I will teach you today. Combining system 1 with system 2, System 1 being the trend following system, with system 2 being the trend reversal system, you will be able to trade literally every market out there while still applying the very foundational principle of technical analysis that has been true for the last 100 years. It's probably going to be true for the next, I'm not going to say 100 years, because in the next 100 years, I don't know. Are we going to be here? I don't know. Like maybe we have AI, super AGI, super intelligent AGI that is just going to be trading for us and we're just going to be chilling by the beach. I don't know. I'm not going to say 100 years in future. But I am going to say 20 years before we get AGI. Never mind. So what does price do at the bottom? What does price do at the top? I'm going to be talking mostly of long scenarios, but of course the short scenarios are going to be exactly the same. At the bottom we have an inverse head and shoulders. At the bottom we have a double bottom. That is of course the same as the top, but instead of an inverse head and shoulders we have a normal head and shoulders, and instead of a double bottom we have a double top. Now it can also, of course, we can also get at the tops and the bottoms, we can get ranges like accumulation ranges or distribution ranges, and those are also valid patterns to trade. Basically, any type of pattern where there is a break and any type of pattern where there is a break of structure is valid to trade. But most of the time, you'll see that it's variations of the double tops, double bottoms, head and shoulders, inverse head and shoulders. So let's take a closer look at this. So we have a downtrend here. And you're looking at this and you're thinking, well, this looks like a really good downtrend. And then you have support here. And maybe you have your moving averages and everything is aligning here. And you're looking at this and you're thinking, you know what? This looks like a really good downtrend. And let's say this is on the 4-hour, right? Price break. And your plan is basically, okay, so when price breaks below this level, I'm going to be waiting for the retest of that level. And I'll be buying here. This is you having an isolated look at the 4-hour time frame and no other time frame. Let's imagine that you're zooming out. You're zooming out and you're looking now on the daily. And on the daily, you see a massive support area here. And not only that, when you're looking at the daily and the weekly, you see that high time frame range that I talked about. And on the weekly, you might have prices going like this. Okay? And that trend that we were looking at on the 4-hour is part of that overall primary trend, that primary move on the daily or the weekly. This is the daily outlook. Now we zoom in to the 4-hour once again, and we see this trend. Now, given the context of the high time frame support, we obviously do not want to follow this trend to the downside when we're at high time frame support. We never short high time frame support. What we want to do, however, is we want to look at changes in behavior of this downtrend, because any changes of behavior of the downtrend would mean that we have a possible shift of structure. We have a possible new trend forming. And when that happens at a high time frame support, it's crucial that we pay attention. If it happens here, it doesn't really matter, because it's in the middle of the trend. A trend can have slight variations and slight, changes in behavior in the middle of the trend, or when the trend is active. But when it reaches that high time frame support, we want to pay attention. Now, what does a change in behavior look like? That could look, for example, a break of the trend line. Remember, when the RLZ method as a trend following system is invalidated, that's when you might want to look at the RLZ reversal if that invalidation happens at a high time frame level. If prices goes up into the reload zone, now let's just assume that the reload, for the sake of this setup, let's assume that the reload zone is here. That's where you have the reload zone. Okay, the moving averages align. So you have the 20 EMA here, you have the 50 EMA here, you maybe have the weekly open here, maybe the monthly open here or something like that. Everything aligns, and then you get the stochastics RSI. Like everything aligns for a trade using the RLZ method. But you're at high time frame support, so you're not going to take that trade. Imagine if price goes above the trend line, above the trend line, above the horizontal level, above the reload zone, like that. That's your first clue of a change in behavior, okay? And this should alert you to the fact that the trend might be shifting. So when you get that move to the upside at high time frame support, what you want to look for is potentially a move down, retest of that level right here, perhaps a retest of that level, and a move higher. What do we have here? We got the head and shoulders pattern. Well, it's more of a Quasimodo pattern. The Quasimodo pattern is when you have a asymmetrical head and shoulders. But in technical terms, looking at the things like the CMT curriculum and the words used in the CMT, there's no such thing in that teaching called the Quasimodo pattern. The Quasimodo pattern is actually just the head and shoulders, but it's a asymmetrical head and shoulders. And basically what that means is just a trend line as a head and shoulders. So either a ascending trend line or a descending trend line like this one, that gives you a trend line, that gives you a head and shoulders with a trend line as a head and as a neckline, and that's basically still a head and shoulders pattern, and I guess a Quasimodo as well. So when you get this, you have a head and shoulders pattern. So you have the continuation trade is invalidated because you're above the trend line, you're above the reload zone and everything, and you're coming down and you're creating a higher low. Now, there's a couple of things you want to do here. You want to pay attention to that high right there, the break of that head and shoulders neckline and the last high. And this, ladies and gentlemen, is when you have the entry trigger. Remember, we also talked about the bullish engulfing candles and the pin bars. If this move is a pin bar or a bullish engulfing candle, that is a great confirmation. What I do is, if the risk reward allows for it, I will enter on the breakout. Otherwise, I will put limit orders on the possible break and retest of that level. See what I'm doing here? We are now entering a possible reversal trade at support, but we're still applying the break and retest of horizontal levels. Now, the way that moving averages work is you cannot apply any moving averages to this system. So this system is a very simplistic way of trading because I'm not using any indicators. This is only purely price action. The only indicator or drawing tools that I might use for this is the reload zone, the fib, and I'll show you why. But this is what you want to be doing, right? Now, you want to put your stop loss either all the way below the very low prior to the breakout, or this last local low, or just below the daily level. And then, of course, your TP will be at the next high time frame level, which in this case would be the range CQ, or wherever you find a good first trouble area. And the first trouble area is the area on the chart where you think that price is going to run into trouble. The first area where you think price might run into trouble. Now, I tested this system with different take profit strategies. When you're in a scenario that you are in right now, with the markets being very directional, after Trump came into office, or well, he's not in office yet, but when Trump got elected, after that, we started seeing strong moves and specifically strong directionary moves. In that scenario, you want to look for runners. You want to look for those directionary moves to continue to the next high time frame levels. I've also tested this system with a take profit target, a negative risk to reward take profit target at the first low time frame FTA, which in most cases is going to be that one right there. The high, the closest high of the break and retest. So you look at the previous trend, you look at the high here, and that's going to be your TP, and then that will give you around 0.5 R most of the time. The risk, the win rate of trading with a negative risk to reward like this one is going to be very high. From my testing, it's between 70 and 80%. And I've tested it through many hundreds of trades, and I've live traded for about 6 months during this summer, and I had a very, very high win rate. There is a lot of problems with trading with a negative risk to reward as well. That you need to be very, very disciplined, very, very disciplined. Because if you take just one extra loser, that means you have to have 2 extra winners to make up for that loser. So if you go on tilt and you maybe start revenge trading, over trading, you're going to have a big drawdown, a very big drawdown, and it's going to take a while for you to get back to profits. I do not recommend trading with a negative risk to reward unless you're really, really confident in what you're doing. I would much more rather see you guys trade with a system where you're letting the trade run, and then perhaps you're taking partial profits, or you're adding to your position on the way up when it gets confirmed. And of course, the way you would add to a position would be if you have, for example, let's say you get that break. So you enter on that retest, you have the break of that level, and then you're retesting that level. What I would do in this case is enter a new position here, with that being your stop loss, and then moving that stop loss to this level, which means that if you're doubling your position, you will take the you will lose the same amount of this trade, get break even on the first one, but you'll make double the amount of profits. Okay, so the more the trade gets, the clearer the trend gets, the more money you'll make, but you'll have the same risk. So we have a good question here. Sure that I cover all the questions here. So from what I've seen is, yes, a trend can change. When you say slope, I guess you're talking about the trend line and the overall direction of the trend, and kind of like the behavior of the trend. And you're absolutely right, but there's no system that's going to work all the time, right? There's no system that's going to work all the time. But when you're at high time frame support and you see these patterns play out, chances of there being a reversal is very high. Now, of course, you won't always have a reversal. You might get stopped out once or twice before the new trend is starting, but that's just trading. That's technical analysis. We don't know what's going to happen in the future, but we can look at past price action and be certain that there is a specific, there is an edge, there is a probability that one thing will happen over the other. So if you look at this, for example, I mean, this could be a good example. I'm going to remove some drawings here, and we'll take a look at an example where this would not work. And then, of course, we're going to look at some live examples. So let's say price is trading like this, and then we're going to get this. Then it's just going to go straight down. That's a real possibility. And now that I showed you the basics of this, I'm gonna look at real examples of this, and I want to draw your attention to Euro USD. Because I actually think that Euro USD is the perfect example of this. This is actually where fundamentals come in, right? Now, if you're in the Discord, you know that, well, actually, for the last 6 months or so, I've been, studying techniques of analyzing the markets from a fundamental perspective. I'm by no means an expert at fundamental analysis. I am, however, an expert at technical analysis, but not at fundamental analysis. But I do have at least 6 months experience analyzing the overall macroeconomics, which have helped me recently quite a lot, especially in the current market conditions where you have these directionary moves. And one way it helped me was on Euro USD. But I want to show you where a reversal strategy like the ones I talk about, where it completely fails because of fundamental events, and when and why waiting for confirmation is so important. So we're going to go to a clean chart here. I'm going to make sure that I have a clean chart. Oh, where is it? So many different ones open here. Right, let's go to that one. This is Euro USD. We're going to be marking out a couple of high time frame levels here. I think that one is one of the most important ones. We're going to look at the range as well. Put range low here, range high about this area. I think that looks absolutely perfect. Okay, so what we have currently is a move from range high down to range EQ. We have a break and retest of the range EQ right here. You can see strong movement to the downside. Now, what if price hits this level at the very bottom? That's a high time frame level. And just like I told you, this works great in the range. If you have, a reversal pattern on the upside, and you want to see price hit that range lows. So let's see it on the trend here. You can see that the 4-hour trend is quite obvious. You have a bearish engulfing candle here, bearish engulfing candle here, a beautiful entry here, bearish engulfing candle here, bearish engulfing here. All of these would most likely been able to be entered using the trend following way of trading. A strong 4-hour bearish engulfing candle here as well, continuing. And of course you have the bearish engulfing candle right here as well. If you add the fibs here, you'll see that it also hit the 50% fib right here, bearish engulfing candle on that one. It would most likely work as a trend following system, trend following trade as well. If you go down here, you see that the market is trending to the downside. We hit that level right here. And now this, with the reversal system in mind, we look at this and we say, you know what, this is the area where we want to look at the reversal. Okay, now if you're purely technical trader, if you're only trading 100% using technical analysis, you need to make sure that you wait for confirmation before you enter a trade. Because if you have no idea what's going on in terms of geopoliticals or economic data from the countries that you're trading, you gotta make sure that you wait for confirmation, because anything can happen. And like when price hit this level, if you're looking at this from a purely technical perspective, it's like, yeah, this looked great for a bounce. I actually took a small long here because of the technicals, but then looking at the fundamentals, Euro very weak, US very strong. There's no fundamental reason for the Euro USD to bounce at this level. So we try to apply the same reasoning here that we did on the previous example. We might want to add a trend line, perhaps goes something like this. We have that trend line. I'm going to put it on that high. I'm gonna put on the fibs here. Now I want to see a break of structure. We're seeing signs of that right now because we can go into the 1 hour, You can see that we have a double bottom on the 1 hour. Might want to look at maybe a break and retest of this level. See what we get. Resistance here. We're breaking above the trend line. Looking at the 4 hour, however, we are not really closing above the trend line, but the behavior of the trend is definitely shifting, because now we're entering more of a range here at the bottom. The trend line is no longer active. We see that we're no longer in that downtrend. The range here is very obvious. We have a range, a low time frame accumulation at high time frame support. Now, what would confirm this trade? Well, what would confirm it is if you have a break and retest of this level. Okay. Now, of course, you can't enter early. Now, of course, if you have fundamental reasons to go long on EU, you might want to enter early here on that level. Maybe you can add a lot of people would add a level here, and they would say something like, okay, break and retest of this horizontal level means that EU is going higher, like this. But you, of course, have to incorporate the bigger structure level right above. It's that level that needs to get retested. And we're not, look at that, we're not getting that, we're not reclaiming that level. However, I remember, I believe I went long on like that retest, because I really like the fact that you had a break and then a retest here of the range EQ, and I looked for EU to come higher, because this is, you know, obviously if you look at the context of the higher time frame level, this is now a daily high time frame level, and you have sort of a almost like a break of structure. And I did have the reasoning that I have was that there's a very strong seasonality pattern on Euro USD to put in a bottom around these times. Well, let's see. Do we have confirmation? Are we going to get any solid breakout here on the 4 hour? And, you know, we kind of do. I mean, looking at this, it feels like, you know, we're kind of getting that breakout. But then again, if we add that horizontal level by incorporating, you know, these wicks and the candle, you can clearly see that there's a resistance level here. I mean, a support level here. You can clearly see prices using this level as support. And you would really want to see a break and retest of this level. This is the level that we need to reclaim for this trade to be active. And that would then be, you know, the RLZ reversal, where you enter on the break and retest of that level. Now, stops can be all the way below the daily level or the range or whatever, but in this case, we'll probably put it here. And then for TP, you look at the next high time frame level above, which would be like the range EQ around that level. So that would be the trade. Now, looking at EU, that never happened. We broke down because obviously we had stronger fundamental reasons to take EU lower. The euro was just much weaker than USD at this point. But what happened after that? Let's see. So this is why you wait for confirmation, and why you you have to make sure that you're getting good confirmation. This, and I actually took a trade here that became a loss, and of course I took a very small risk position because I wanted to add to that position when entering that level. But then again, I was too early. I did not wait for profit confirmation. That became a loss. Very important to wait for good confirmation before entering the trade. But what happened on this move lower? Let's go back to the weekly. And let's look at, you know, this low right here. The last time Trump came into office, right? And we hit that low right there. And that low is also, of course, confluent with high time frame level. On the weekly, It's a big level, obviously, big level. You make it a little bit smaller based on daily price action. We can actually probably draw it out like this. So on the daily, we had that wick right there. Go down to the 4 hour. We go down to the 1 hour. Go down all the way to the 15 minute. This is a massive move to the downside, right? A massive, massive move to the downside. Now, if you want to apply, look at the 1 hour, for example, you have one move down and then it's kind of recovering. But what if you see, what if you see something like this? Price comes back down and then forms a W with double bottom pattern here. Then you might want to look at a reclaim of that level. And then of course, if you want higher confirmation, reclaim of that previous range that we broke down from. Let's look at how price is respecting this level. Now, obviously, when you have a this is a good question. Do you think it's possible to have a win rate of 80% plus win rate? Yeah, absolutely. It's absolutely possible. It's possible to have a 90% win rate system and 95% win rate system as well. It's 100% possible. But what you have to understand is the higher the win rate, the lower the risk to reward. Okay, so if you want a high win rate, just take profit. Just take profit early, But then again, you lose a trade. Like if you have a half an hour win rate and negative risk reward for just only you make half of what you do on your winners than your losers, you have to be winning. On average, you have to have twice as many winners as losers to be profitable, to even be profitable, to break even. So with that, you need a 80% win rate, something like that, to have a high, be profitable. So yeah, of course you can have a 90% win rate and an 80% win rate system. I mean, I'll show you. I think I had like 80% win rate on this one over the summer. So let's give me a second and let's just show you what the win rate of this specific trading strategy that I'm talking about now it had over the summer. Give me a second here. I'll show you. Okay, so from July, from June, July, from July to September, the win rate was 72%. So, and that was also what I found in back testing. So 72%, right? And the risk to reward, however, was not great. You can look at we can look at this one. This graph here shows you the risk to reward over that period, and you'll see the distribution between wins and losses here. So 72% obviously looks and sounds very impressive, but if you look at the risk to reward, it only ended up doing like 3R, okay? Only 3R, and was very much, you know, up and down here. And what I found was that, yeah, high win rate doesn't always mean more money, okay? High win rate usually means you make on average lower risk to reward, which is it's very difficult to handle the drawdowns in periods like that, because you know that, okay, if you have 3 losers in a row, you need to make 6 winners to get that back if you have an average risk to reward of your winners being half an hour. So high win rate, low risk to reward, but you can, of course, it's very possible to have a high win rate, but if you have a high win rate and a high risk to reward, yeah, you're just a legendary trader. I mean, you're going to be working for, you're probably going to be working for some major hedge fund, and I mean, you're not going to be, you don't see, like, if someone on social media says like, oh, I have a 90% win rate and I have a very, very high reward, you know, buy this course or whatever, like, you know, if I had a 90% win rate and a average risk to reward of like 5 or, you know, 3, 4, 5 on my winners, I would not be here. I would not be working for the fivers. I would not be doing this. I would not be doing anything. I would just be taking my personal account and I would be doubling that personal account every 6 months. And I would be a multi-millionaire. And it's just like, yeah, you understand what I'm going with this. Like, most of these high risk to, like, if an influencer on Twitter or social media, like, if they say that I have a 90% win rate and I take trades that are 2 to 3R and 90% win rate with that, it's just lies, simply lies, and we all know that. It's just logical. Okay, so let's see if we have any other examples of this. By the way, we can look at USD CHF right here, and what we have on USD CHF is, of course, the these principles and the patterns that I've talked about, being, you know, the based on the fundamentals of TA, they work in all markets. And we can take a look at one thing that I've talked about, being, try to put on a range here. It's something like that perhaps. And then you see that you have a horizontal level right here. That's on the weekly. High time frame resistance here on USD CHF. If you go down to the daily, you have a move that looks like this. And this could very well turn into a head and shoulders pattern, or a symmetrical head and shoulders pattern, or a Quasimodo, with the trend line going like this. That would, of course, mean a possible reversal coming in on USD CHF. And then if you get perhaps on, you have that break to the downside, and you see that it starts trading to the downside like this, you might want to go back out to the weekly and look at high time frame levels. Where do we think price might be headed to? if we get that breakdown. But this looks like a pretty good level. Going back to the daily, going back to the 4 hour. You see that we might have a new trend starting if we get this type of move. Trade might be on the retest of the head and shoulders neckline. These stops where we would have the right shoulder, and then TP down at those lows right there. And then you can of course enter a small position here, stop loss here. You break this level, double your position, move stops here. You'll make double the amount of money, but you'll risk the same amount of money because the first setup will be stopped out at the break even, while the second setup will be losing the same as the original setup would be losing. So you'll be risking the same amount of money, but you'll make twice that amount of money. Hopefully everything that I've talked about is clear. Everything that I talked about today is clear. I unfortunately do not have any more time to go through more examples. Hopefully I'll be able to do that more tomorrow. But that's the overall foundation of how to look for reversal. You're basically applying the same things with a trend following system, but you're looking for the behavior of price action when the new trend is forming. All right, guys, I'm setting up a giveaway as well. I'm going to be adding the giveaway to all the previous live streams description, and we're going to have the one tomorrow as well. It's very important that you sign up for the technical trading workshop event, because the secret code that's going to be used in the giveaway will be sent out to the email that you used to register for the event. So if you're not registered today, make sure that you go to the link in the description below and sign up for the technical trading workshop. You can also go to rlztrading.com and sign up using that link on that landing page. All right, guys, that's it for today's slightly shorter live stream that we did previous days, but tomorrow we'll do a longer one. And I'd like to thank you all for joining here today, and please of course let me know if you do have any questions. I'm available in the Discord server. Take care everyone, and see you all tomorrow.